America's economy is growing by more than 3%, a figure that dazzles the headlines and promises prosperity. But beneath this superficially positive statistic lies a story of stark contradictions, hidden vulnerabilities, and regional disparities that demand a closer look. Today, we delve deep into America's financial undercurrents, a national debt that has soared past $37 trillion, trade policies that swing with volatile intensity, and a burgeoning artificial intelligence bubble that hints at both promise and peril. Our journey takes us beyond the optimistic surface to reveal an economic landscape where not all is as it seems. At first glance, the numbers tell a tale of robust growth. The national economy expands at a rate that places the United States comfortably among developed nations. Yet this triumph conceals internal fractures that deepen with every fiscal quarter. The steady pulse of a 3% growth rate is punctuated by the unpredictable rhythms of trade policy fluctuations and a reliance on headline figures that ignore the fine print of state-by-state reality. While some 16 states register clear economic gains, 13 remain stagnant, and a concerning 22 states are caught in an economic contraction. This divergence between national sentiment and localized truth sets the stage for an unfolding narrative that is as complex as it is contradictory. Imagine a country where positive growth figures mask underlying issues that threaten stability. The national debt, now exceeding $37 trillion as of November 2025, looms as a silent warning. It is no secret that fiscal irresponsibility, when compounded with unpredictable trade policies and emerging technological disruptions, can create a breeding ground for instability. As tariffs are adjusted and international trade disputes flare up, the United States finds itself navigating a minefield of economic uncertainties. The emergence of a speculative AI bubble adds another layer of complexity to this portrait. As investments pour into artificial intelligence, comparisons emerge with past tech bubbles that eventually burst under the weight of unrealistic expectations. What is unfolding is a scenario in which the promise of digital innovation feeds into a speculative frenzy, potentially diverting capital from more sustainable sectors. This brewing bubble stands as a cautionary emblem of an economy that may be prioritizing short-term gains at the expense of long-term stability, shifting our focus to the heart of America, the 50 states. We uncover a mosaic of economic realities that vary dramatically across regions. In states like Wyoming, Arkansas, and Mississippi, where blue-collar workers have long been the backbone of the local economy, the realities of today paint a sobering picture. Blue-collar jobs, the very jobs once promised to be revived by political leaders, now form just a sliver of the overall employment landscape. Manufacturing, once the kingdom of American prosperity, has steadily eroded over the decades. In the 1960s, manufacturing, contributing about 25% to GDP, was a symbol of national strength. Today, that number has dwindled to around 10% of the economy, and manufacturing jobs account for merely 8% of total employment. This dramatic decline underscores a broader trend: the erosion of an industrial base that many communities still depend on. As we journey through the economic fabric of individual states, it becomes clear that the optimistic headlines are at odds with local dynamism. The 16 states experiencing growth act as islands of prosperity amidst a sea of economic contraction and stagnation. The contractive economies, spread over 22 states, signal that while the aggregate number of a 3% national growth rate might appear strong, the benefits are unevenly distributed in these regions. Residents confront everyday economic challenges: dwindling job prospects, declining industries, and the palpable anxiety of an uncertain future. The situation is reminiscent of cracks forming beneath a seemingly stable structure, each fissure a precursor to potential systemic failure. These economic fractures are more than just statistics. They are the lived realities of communities across the nation. In industrial towns where factories once hummed with productivity, silence now prevails as manufacturing plants close and blue-collar jobs vanish. These communities, which were once buoyed by a sense of purpose and economic security, now face the harsh prospect of decline. The shift from a manufacturing-based economy to one dominated by service sectors and digital technologies has left many feeling abandoned. In states like Mississippi and Arkansas, where industrial work was more than a means of employment, it was a way of life, the loss carries profound social and cultural ramifications. The observable tension between high-level economic indicators and on-the-ground realities evokes questions of equity and sustainability, urging us to consider what lies beneath the glossy surface of national statistics. Yet, even amid these disparities, the promise of innovation and growth continues to attract attention. Discussions about modernizing infrastructure, investing in technology, and retraining a workforce burdened by the decline of traditional manufacturing offer hope. However, such initiatives require careful calibration. The rapid emergence of artificial intelligence as a transformative force in industry is double-edged. On one side, AI offers the possibility of increased efficiency and the creation of new market sectors. On the other, it poses the risk of deepening existing inequalities if technological advancements further displace already vulnerable workers. The current trajectory is fraught with challenges, and the true test will be whether policymakers and industry leaders can forge strategies that balance innovation with equitable growth. Within this intricate interplay of growth and contraction, policy decisions play a pivotal role. Trade policies, for example, have become a central element in shaping the economic arena, the oscillation between protectionism and global market integration creates an environment of uncertainty that complicates long-term investment strategies. The imposition of tariffs and the resulting trade disputes affect not only large industries but also small businesses and local communities. Economic forecasts indicate that this volatility is likely to persist, underscoring a critical point. The resilience of America's economy is being tested on multiple fronts, from state-level disparities to global market uncertainties. Moreover, the specter of recession looms large. History teaches us that economic downturns rarely remain confined to isolated pockets. The interconnected nature of modern economies means that fractures in one region can rapidly propagate across the entire system. Today, the question is not if a recession will occur, but rather how deep its wounds will be and which regions will suffer the most. The risk is particularly acute in those states already experiencing contraction. In these areas, local business closures, reduced consumer spending, and a strain on public services can ignite a vicious cycle of decline, a cycle that might eventually ripple outward, dragging the national economy into a broader malaise. They are living through the gap between a promising national statistic and the everyday challenges of job insecurity, reduced wages, and the erosion of community support structures. The promise of revival that once came with political rhetoric now seems distant, replaced by a reality where the decline of traditional industries and regional disparities have left indelible scars. Their stories, conveyed through the pain of dissolution and the hope for renewal, remind us that economic analysis is not just about numbers, it is about people and their livelihoods. The final analysis. The paradox of America's economy lies in its dual identity. On one hand, robust headline figures suggest strength, buoyed by growth in select sectors and regions. On the other, a closer look reveals a patchwork of vulnerabilities: a ballooning national debt, a volatile trade environment, an emerging AI bubble, and a stark divergence between thriving and struggling states. This dissonance Between what appears to be progress and what is manifesting as deep-seated economic fragility forms the crux of our inquiry. The lessons of history caution us that when a nation's economic strength is built on shifting sands, the risk of a broader collapse becomes all too real. Today's analysis is not merely an academic exercise, it is a call for a more nuanced understanding of economic success. It invites us to look beyond the headline numbers and scrutinize the underlying forces that shape the financial health of our nation as policymakers, economists, and citizens. We are tasked with the challenge of identifying and addressing the vulnerabilities that lurk beneath America's apparent prosperity. The stakes are high for the decisions made in boardrooms and legislative chambers now will determine whether the cracks in our economic foundations widen into chasms or are managed before they cause irreversible damage. Reflecting on the complexities of this economic landscape, we must recognize that the narrative of America's financial state is still being written. The interplay of fiscal policy, technological innovation, and regional disparities is dynamic and evolving. With each passing fiscal quarter, new data provides fresh insights, and with them, new challenges and opportunities arise. The resilience of America's economy will be measured not only by its ability to generate growth, but also by its capacity to adapt, sustain, and elevate communities that have long been sidelined by the forces of change.